have an aggressive expansion of stores on their front. And we are seeing a real push with respect to beverages and liquor stores that are helping drive this expansion. Marek, perhaps you can provide some context for our viewers how this liquor strategy is assisting in your strategy in terms of growth.
Exactly. Hi. Good morning, Ayan. Thank you for having me on the show. Yes, this morning we put out our full year results for the FY26 year. And yes, within the results, we reflected 50 new outlets that joined the Boxer estate during the course of the year. And yes, there is a leaning towards liquor stores. We were late into the liquor retail market, and about 55% of our supermarkets have an adjoining liquor store. So it represents an opportunity for growth. And during the course of the year, we increased that percentage up to 61%. Obviously, the strategy is to try and get a liquor store attached to each of our main supermarket format stores, and that represents an opportunity to grow that particular format.
And regarding the liquor store strategy, how does it speak to the current economic environment? I believe retailers are quite sensitive. Your consumers are quite price sensitive. You've managed to, drive whatever efficiency gains you've had into the price, and as you've mentioned in your presentation, a virtuous circle of reinvesting these efficiency gains.
Yeah, I think, we're looking to grow our business and then become a bigger player in South African retail. And we look to the three format stores that we have within the business, namely supermarkets, liquor offering, and then our Boxer Build format as well. So we are growing in each of those three areas. As mentioned, liquor offers a quick opportunity to add outlets, and it creates a more convenient shopping environment for a consumer to come in and be able to buy their groceries and their liquor requirements at the same time. So I think it's very much a complementary strategy that is common throughout retail.
And do you feel this liquor strategy will hold with the kind of inflationary environment that we have in the next 6 to 8 months?
Yes, I think that it's a core, component of our business and complementary model. And obviously we are seeing a challenging trading environment at the moment with the impact of higher energy costs that are likely to flow through into the market over the next month or two. But we're very confident in our value offering for consumers, and we will continue to provide them with that value.
In your presentation, you mentioned the opening of the Tongaat Distribution Center in KZN, and it supplies a significant number of stores. However, you did mention that you are bracing for a loss of supply chain efficiency, perhaps in the next half of the year, because of this new capacity. Could you perhaps speak to how your company is positioning itself ahead of this new distribution center, and particularly in light of your emphasis on efficiency gain within your virtuous circle?
Yeah, we were very excited to open our distribution center late last year in September. I think, came with a narrative or with an expectation that as you create capacity, there is a level of cost that's added into the Boxer income statement. I think the strong message that we put out this morning was that we were delighted that, in fact, we had avoided any additional costs, and our supply chain efficiencies across our other 6 distribution centers enabled us to not incur any additional impact on our gross margin as a result of the new facility. I think this new facility has a capacity to service about 200 supermarkets going forward. And as we rebalance our store estate across our now 7 distribution centers, we've created capacity around the entire country to add to that store estate. So yes, we have created a capacity, which always brings level of management required to avoid a potential impact. But confident that we are over that hill, and every new store that we add to our estate going forward, improves our efficiency.
Healthcare matters, but what matters most?
Having cover for the people who keep this business going.
Bonitas is there for you when it counts. Bonitas, medical aid for South Africa. Visit bonitas.co.za and find your plan.
We have some new players in the market. Walmart has been entering quite aggressively with advertising in Johannesburg. They're trying to capture a share in the market. How's your company positioning itself ahead of new entrants, and where do you believe you fit in terms of the value proposition and maintaining a competitive advantage over these new global entrants?
Yeah, I think, Walmart's been around in South Africa for a number of years, and we've competed against some of their formats, going back many years. I think their new initiative of their stores under the Walmart brand, as a new entrant, so they don't directly overlap at the moment with our Boxer offering, which is more of a tighter ranged value offering for consumers. But like any new retailer coming into our market, we keep an eye on the impact that they're having, and we certainly learn by looking at the different formats that are around, and they do influence some of our thinking going forward. But we remain absolutely confident that our discount structure and the way in which we've set our business up gives us a competitive advantage and enables us to continuously offer great value to our customers.
Are people not suffering in this inflationary environment? You've mentioned in your presentation that your margin has held steady and you've driven efficiency gains into pricing. But from what you're seeing from the data, are seeing any strain within the inflationary economic environment currently?
I think it's important to reflect back over the last 12 months. There's been deflation in our selling prices, and that's continued through into the first 2 months of our new financial year. So as we sit here today, we're still in an environment of deflation. I think it's looking forward that we are looking out to say what is the impact of energy costs on pricing going forward. And we do believe that it is inevitable that later through this year there will be an impact on selling prices. We're going to do our best to manage other areas of our business to delay any increases in price going forward, and that's through improving efficiencies, saving on costs, looking at other income levers that we can use to offset any increase. And yes, we'll be guided by our value proposition, to customers before we're putting up any selling prices.
There's been a 1.1 billion rand in net cash, a significant swing from 180 million in net position last year. Does this speak to your positioning in terms of the year ahead?
We're very happy with the cash generation over the past year, within the business. It has been a goal of ours to extinguish the debt taken on at our listing of 850 million. And we've since extinguished that debt completely. So it was a question that is put to us, what cash do we require going forward? I think that's a high quality problem that we'll be applying our minds to. We are continuously looking out for ways to invest that money to expand our business, etc. And our board will be also determining if there is any impact on future dividends.
If you look back at same time next year, what would constitute success for you, for the business, with the Tonga distribution center now kind of in full swing, this aggressive store expansion? What would constitute success for you next time this year, looking back?
Yeah, a good question. I think we've got some strong strategies in play that we hope to bring to market or over the course of this year. We have exciting developments taking place with regard to the recently launched B Media element of our business, and it was launched, in fact, last night on ETV through our Nyama challenge that we did in collaboration with 10 suppliers. That runs over the next 3 months and is really, elevating our Boxer brand and those of our partners in the market. We've got high hopes in that regard. Obviously, the expansion of the group, the 60 stores that you mentioned earlier, I'd like to look back and say, yes, we opened all 60 of these stores with a solid contribution to our overall turnover growth. So I think those are the big projects that we hope to put a tick at in a year's time.
There's been that growth in stores. A few have closed. What has driven that store closure within the group?
So we have 576 different outlets across our group, and obviously there micro factors that might impact on individual stores. We did close a few stores this year. Some were closed because we opened a bigger and better store nearby, and we consolidated the business into that new store. But very localized reasons, and we're fully confident in the model of the store and the growth projections going forward.
Thank you, Mark. This is Irakli from Biz News.
Thank you, Irakli.